to feel the raindrop. Second time when I was over, it's the same car.
I hope everyone's doing well. Welcome back to another lesson. So today's lesson is about entries and execution. So the way I kind of want you guys to, understand the lessons, we've started on a higher time frames. We've really taken in bias, ranges, whatnot. Now that you have all of this, how do you execute? I mean, I'm sure most of you know how to execute, right? Setting trades, taking trades generally, but how do we optimize that? Like I said, the next few lessons focus on optimization, and this one is for entry. So similar to framework, right? If you guys remember the framework lesson, we had a checklist. Do this, then do this, then this. Very methodical, right? That is exactly how I want you guys to think about your entries as well. When you're executing trades, we're thinking the exact same way. So again, it is about framework on a lower time frame as well. But let's imagine before we come to this list, we've now gone through the higher time frame framework list. We've gone through the weekly, the daily, understood what we want from our sessions, what price is drawing to you, blah, blah, blah. All of that stuff we've already covered. And now it's like, okay, yeah, I know where price is going. I want to get involved. Like, you want to get in line with the move now. Cool. So we've spoken about this before a bit. The first thing is, what type of entry is it? Now, I've written two things, but what do they actually mean? Market structure shift is our reversal. Breaker structure is continuation. Right? Understanding what type of entry are we getting in line with? Are we getting in at, the actual reversal and taking price, to our target, our draw? Or are we getting in line at breaker structure? So we're getting involved in a move that has already started taking place. And this is important, to weigh up or depending on the type of system you have, the way you like to trade, because I know some traders, if they miss this market structure shift, if they miss the reversal point, they don't care about that move, it's gone. Whereas I know some scalpers, they don't really care. It doesn't affect them. They'll trade the reversal, just trade the breaker structure, trade whatever. Cool. So now the next points all go hand in hand. We have to consider our ranges. So we draw on that OTE, we draw on that fib 0, 0.51. That is our range, right? Let's imagine we've just had a market structure shift. You mark from premium to discount down here. You got your premium up there, your discount here. Assuming it's a bearish market structure shift, yeah? Now RTA, this isn't really a term, I've kind of just written it today. Return to array. So you might see people write RTO, which is return to order block, quite often. What we want, right, when we short, as we know, we say this so many times, price returns to the premium. We plan to trade off the first premium array if we're shorting. Now, how does this work intraday? Do I always pick the first array? No, I'll be honest. Sometimes it makes more sense to pick different arrays. I don't pick the first array every time. Now, one thing I really want to touch on today, I've mentioned, I market execute my trades mainly, not always, but majority of the time I like to, especially when I'm very active on the charts. So we're going to get into how I go about doing that. Now, the point I was just making, sometimes it's favorable to pick certain arrays compared to others. So, when does that happen? Now, I've taught you guys both these concepts. Total soup and IOFED. Total soup is engineering liquidity into an array. IOFED is engineering liquidity into an imbalance in line with bias. Right? I've got this interesting word here, inducement. What is inducement, right? Just think about the term to induce. In a way, the way I like to think of it at least, we're inducing retail. Not us specifically, but the algorithm is. What it will do sometimes is engineer this liquidity, which we refer to as turtle soup, and it will hit a certain level. And Typically with inducement, what you will see is that it doesn't always tap an array. So when price retraces and it's not tapped an array and it's moved away, that always sparks my interest. Sometimes it will tap an array, but it won't retrace down to the discount or down to, the premium for short, or up to the premium, for short. That's when it sparks my interest. So what I'm saying is, when we have a range, we expect a retracement to premium or discount. If price falls short of that and moves away, it will spark my interest in thinking that high or low that was made before you move away is inducement for an array below it. That's a bit of a mouthful, might not make sense. Let's open the charts and see what I actually mean. Okay, cool. So I've marked out, a random range here. So let's imagine, right? I want you guys to imagine, let me just draw it on. Yeah, cool. Now, what have I marked here? Yeah, let's think about this for a second. This, right? Market structure shift. Market structure shift takes place, and what do? We mark high to low. We expect this retracement, right? Fair enough. Quite simple. We want a retracement to the premium. We want to get in line with that move. That's what I taught you guys. That's what you guys will commonly see. Now, right, what I've also taught you, this is the reversal. We can trade it. Like I said, some people will miss that reversal, which is fine. And then they will try and take the next range. So how do we draw the next range? From the next swing to the next swing. And as we typically know, we put our stop loss at the 1 and take profit at the 0 for shorting. So in this scenario, price comes like this. You're thinking, oh yeah, it's going to come here. We're going to short. Happy days. And get blasted out of the water here. Right? Why has that happened? Now, this is what I want you guys to consider for your ranges. Cool, I understand market structure, high to low. This is your range, price retraces, moves away. If price does not offer you that move into this premium, our market structure shift, consider the next low, right? Consider it like this. Understand that this is, let's say, at internal high, but consider this low instead. And I want you guys to imagine that this high could be used as inducement. Now, typically, for this scenario to be valid, I'm looking for an array up here. We're going to have an order block somewhere here. We also might have a fair value gap. I might even have another order block somewhere here. That is what I'm looking for. I'm looking for an untapped array that price can trade into. So let's imagine, price now comes up, trades into this order block here, our imaginary order block. And what has it done by trading into that order block? It's taken liquidity, tapped into an order block and moved away. When it starts moving away, what becomes the target? The 0, as per. So let's go over that again. Market structure shift, high, low. We do not get a retracement into the premium, and we know that there are untapped arrays sitting here. We then start considering the next low as the low to use for our fib. High, low, get a retracement. Now, let's imagine this is the 5-minute time frame, right? If this is the 5-minute time frame and we now switch to our 15, this may just look like a straight line. What I mean by that is, on your 15-minute, this high over here may just be a wick. It might not even exist. And that's why, because what's price doing? It's just coming OT on the 15-minute. And all now you might be getting caught out thinking, oh yeah, on the 5-minute we didn't come OTE, let me catch the next retracement. No. wait for that move in premium and discount. That is what we wait for. Now, another thing while I am here that I'd like to touch on, why is this, retracement important at a market structure shift? If we're seeing a true reverse when we see a market structure shift, from one of the first few lessons I've told you guys, we want to see displacement, right? If we see displacement, yeah, cool, let me just neaten this up. Okay, cool. I want you guys to imagine that's one swing, right? It's a bit messy, but you guys, I hope you get the point what I'm trying to make here. Cool. So if we're getting displacement, right, we get this big move down. How will our breaker block be in a premium if we're not getting displacement? Now, what I'm saying is, right, I'm not saying every breaker block, bearish breaker block, is in a premium, of course. Some of them are in discount. Your mitigation blocks can be in discount. And you might think, oh yeah, let me not trade off them. But what I'm saying is typically we see a lot of breaker blocks in a premium, right? When we're short and when we see market structure shifts. Why are they in a premium? Because price has to make a fairly significant run below, right? We need to see this displacement for the breaker block to end up in this premium, if that makes sense. Right? Just try and visualize that. But yeah. So that's it, touching on, the idea of total soup and IOFED and the ranges. The range play, we can call it. Cool. Now, let's look at this, right? So first thing, going back to basics, bias. This target I have marked here is a weekly array on Euro USD. We've had a very strong reaction. Tapped displacement. Displacement takes this low, which I will consider a market structure shift. So what can we then do? Mark high to low. See, price has come to premium. We've got that delivery. We've tapped into some sort of array. So now we expect price to draw to this low. Cool. Let's come on a lower time frame. Within this, we have another range, right? This range, which is our 1 hour range. Now we know that this is the target, so just to make things neater, I will delete this. I will put an arrow down here instead, just so it's a bit cleaner. Cool. So you know that this is your 1 hour range. Now I want you guys to use a bit of common sense here, right? Cool, prices come into a premium. Have we tapped into anything at the moment? I just want you to line it up, right? Let's say we consider this the breaker block here. Oh, sorry, mitigation block. Price tapped into anything? If I just line that up there. It looks like it has, but it hasn't. It's very narrowly missed. Yeah. Now, aside from that, the array that my eyes draw to is this imbalance. So now, the way I'd be looking at this range, right? I mean, if any of you manage to watch this video tonight, I doubt it because it's midnight. This is free bias for your following day. This is what I would like to see. I would like to see price run into this, right? Run into this fair value gap, this imbalance, right? And then we get moved lower. So how am I framing this for my day, right? This is going back to basics. This isn't exactly the point of today's lesson, but let's just think about it for a sec. If I turn my session indicator on, Asia range is going to start in about an hour. Let's assume we start consolidating. It might even trade a bit lower, higher. We could, expect the London Judas into this. Get New York distribution down here. That'd be very nice, considering, on the 1 hour, this is a target. On the 4 hour, this is the target, right? So make a lot of sense for price to push into an array and then resume its descent. Cool. So now let's come on a lower time frame. Now, as much as I'd like to talk about entries in the following day and essentially give you guys signals I can't, because it is, midnight at the moment, like I said. So there's no price action for me to go off, no Asia range, London traders, whatever. Cool. So let's look into the previous days. Now, the first interesting thing that catches my eye, and I've mentioned this to you guys before, right? The first thing I said, right? Have a checklist for your trading. Now, what's very nice, and I recommend you guys to do this. If you need help with this, just drop me a message. I'll be happy to help. Mark out your kill zones as I have done. Draw a box, do whatever you prefer, but mark them out. Make your own life easier. I do not trade in a kill zone before, if there has not been a sweep. Now, what did this run from this high to this low do? Run this whole trend line, right? And if I line up this low, also runs this low very slightly, runs all these lows on the way down. After doing that, what do we get? We get this strong run high, we run a high. So now, run a low, then run a high straight after, bullish. So this is entry number 1, provided by price action. So where would I have entered? Would I have got tapped in? Unfortunately, I would have tried to enter at this candle as the order block. If you try to enter just slightly higher and the actual this candle as well, you probably would have got missed. Yeah, you would have got missed, which is very unfortunate. But what can you do? Sometimes price does that. Next range we consider from now this new low. Bear in mind, right? So one thing I want to go back to, sorry. This high to low. What does this low do? Deliver into a discount, deliver into an array, fair value gap over here. So in my own head, what is it? This range has been, ticked off. Let's say it's been validated. Now let's consider the next range. From this low to this high. Once again, what does price do? Go up, retrace into this. These candles are all one order block. Of course, this fair value gap as well. Move off. Nice. And then the third one. Again, you get that retracement. This time, unfortunately, your take profit would not have been hit. Would have got stopped out. So now here's a few more things, right? 3:30 is an interesting time to mark out. Okay, cool. 3:30. It's not 3:30 in specific, but rather the middle of both kill zones can be a very interesting time to mark out. It can be a time to anticipate a reversal. So if we know we've had 1 trading opportunity, 2, and then the third, and now we've hit the middle of the kill zone, we've swept liquidity. A sweep of liquidity warrants what? Potential reversal. It's a bit fishy. So, I'm not saying that this was necessarily easy to not get caught out here, drawing from this low to this high, retrace, aim for this high. Very easy to get caught out there. But, price after the midpoint of the kill zone starts to offer a reversal. So now how do we trade this reversal? So me personally, from this high to this low, I would have wanted a nice retracement up here, right? Price doesn't give it, so now my interest is sparked. We've even left relative equal highs. It's like, whoa, price gonna run these? What array is it gonna run them into? This order block, cool. However, price continues to displace lower. So now we can come to an understanding that price will not be returning to there. Now, these are the type of things I want you guys to notice. Now, next low to high, right? Cool. This scenario in specific. Sorry if it's a bit messy. Let me get rid of this. So high to low. Price does retrace, and of course it does not come to a premium as we want it to, which is annoying because that's a trading opportunity mix. Now, in this scenario, what does, or rather, what do these candles do? This specific candle, what does it do while forming a swing high? Sweeps the previous candle, runs into this array, displaces lower. Remember, wicks can count as displacement. The next candle is also displacing lower. Now, using the previous lesson, bearish order flow, creating bearish arrays. Of course, there's an order block. This is now a rejection block. So what becomes our next range? We can consider the range down to this low. We get a retracement to this rejection block, and of course get a beautiful move lower. And same way, now this is exactly what I was talking about. So if you go this high to this low, right, I want you guys to notice, right, it's a bit fishy. From here we get this retracement, but we don't really get, a retracement into this premium. We've of course traded into this fair value gap, not traded quite deep in. Now we can then consider this next low as such and put our range. And what does price do? Run up, of course. Now this is very contextual, guys. You have to have awareness of two things. Where is price? 1 hour range, 4 hour range, whatever. Bullish, bearish, whatever. Your bias. We've gone over that lots of times. But awareness of your time as well. Your kill zone is starting. In your kill zones, you expect a sweep before your trades are green lighted. What does the first candle of the kill zone offer you? A sweep. This is the first candle of the kill zone. And what has it come and done? Swept into a premium. Oh, I don't want to do that. Okay, cool. Swept into a premium. And now we get that, we start seeing that move lower. Of course, I know we get a bit of a dodgy retracement there, leave equal highs. But at the moment, we are bearish. We're targeting this low, right? Again, you can consider this high to this low, get a nice retracement, take profit hit. And then, of course, on the next opportunity, we do actually get a reversal without hitting our next hit profit. Cool. And now, why has this happened? Bear in mind, quite a few things to consider. Basics, I know I'm teaching you guys a lot of things and we're really zooming into time frames, but please don't forget your basics. Your ADR. Let's assume from here to here your ADR was exhausted. Well, clearly it was, right? If I just measure this, use it as a rough measure on the day, done almost exactly 100 pips. See that 100 pips done? We're probably not interested in shorts anymore. We're probably going to trade back into the range. So now when we start trading back into the range, what does that become? Just the OTE retracement, right? Basic, high to low, trace to the OTE before we carry on lower. Going into the Friday is all about context. Right. So now one last thing that I would like to touch on here. This trade in specific, let's use, let me just check if there's any other examples I'd like to use. Okay, cool. Let's actually use this one. Right. Cool. Let me delete this. And let's come down to our 1 minute. Now, this is not something I would recommend to everyone. It can be a bit stressful if you're not avidly watching the charts. Now, what does price do here? So This was our 5-minute range from here to here, right? Now we expect a retracement into the discount. We start paying attention to our arrays. 1 minute order block, of course, on the higher time frame, we had an imbalance here. So you traded into this, so it's piqued your interest because we're in a discount, we're in an array. Price forms a low and gives you this move after tapping into an array, right? Look at this. Price did not close inside that order block. This for me would have been the perfect place to execute. A perfect trade in my eyes. Kill zone starts, we get a sweep of all this liquidity. We immediately get a very strong run higher, taking out this high, right? We now anticipate a retracement to the discount happens. Price taps into discount array, moves off, we get strong reaction. And what is this candle? This candle is a swing low. I know the 1 minute moves fast, but when you see this low form, how is this a swing low? The candle before closed higher, the candle after closed higher, you're getting that move away. In fact, what we can notice, on the 1 minute actually, run low, run high. This is actually a 1 minute market structure shift in this example. But even beside that, we know that we formed a swing low in a discount. And this would have warranted me market executing a buy. The only thing with this, you need to be, kind of experienced, understand your lot sizes. Over here, your stop loss is about 10 pips, right? Depending on your account size, if you're using the same funded account size, you probably will know how many lots to use for that stop loss for 10 pips. Those numbers kind of eventually hit the back of your brain. So yeah, that was the last thing I wanted to touch on. Oh, that was a nice and informative lesson for you guys. I do think it should be a little bit of a game changer for some of you. Once again, we are just focusing on adding refinements, and I'll be back soon with more lessons, especially on psychology, risk management, profit taking, all of those things.